What are your expectations for Tesla stock this year? After a challenging couple of months, Tesla stock is now seeing an upward trend, albeit slowly. As another year begins, most experts are becoming more optimistic about the leading EV company's stock's future, at least for the near term. You definitely would not want to miss this one. As of late December, shares of electric vehicle maker Tesla, Rivian, and Lucid Motors rocketed higher, up 8.4%, 6.2%, and 6.2% respectively. Tesla received some welcome company-specific news on December 29th, while Lucid had a favorable funding round in the previous week. But the likely cause of the following rise was a macroeconomic data point that lifted all high-growth stocks. That came in the form of the day's employment record, in which bad news is terrific news for certain beaten-down high-growth names. That said, Morgan Stanley analyst Adam Jonas wrote a bullish note on Tesla after the stock's amazing plunge over the past month. Although he lowered his price target from $330 to $250 due to the challenging macroeconomic and high-rate environment, Jonas said he believed Tesla could extend its lead over both electric vehicle startups and legacy players making the EV transition due to its first-mover status and ability to self-fund its operations. Within this environment, we believe players that are self-funded with demonstrated scale and cost leadership throughout the value chain can be relative winners. Simply put, Jonas argues that strong players will get stronger in a difficult environment. Amidst stock market craziness driving the stock lower, Tesla CEO Elon Musk says that it is an opportunity. Musk has some simple advice for Tesla employees sweating 2022's 65% setback for the company's stock price. Ignore it. In the postscript portion of a letter penned to Tesla's employees recently, the organization's chief executive says in reference to the stock's slump, "Don't be too bothered by stock market craziness. As we demonstrate continued excellent performance, the market will recognize that. Long term, I believe very much that Tesla will be the most valuable company on Earth." While it remains to be seen if Tesla will be the most valuable company on Earth, Elon's right about investors eventually recognizing the car maker's excellent performance. They just need to realize and/or remember several things for the stock to begin rallying again. First, it should be noted that the sell-off is more about Musk's acquisition of Twitter than Tesla itself. The challenge of being a high-profile CEO of a culturally relevant company is that the culture will speak to that CEO through the company's stock. In this case, the culture's message is largely one of disapproval of Musk's recent Twitter acquisition. Aside from being a potential distraction from his duties as head of Tesla, the crowd isn't a fan of the negative attention Musk has brought himself at Twitter. Well, there's no use in crying over spilled milk, as Musk now owns Twitter and has already proven he's going to run it disruptively. He appears not to be discouraged by the market's indirect revolt via the sell-off of Twitter shares. There's nothing else to be said in the form of continued selling. Indeed, if nothing else, this underlying dynamic may eventually fuel a recovery rally. Musk has confirmed he will step down as Twitter's chief once a replacement is found. He's not offering any sort of time frame, and odds are good he'll find someone more like him than not, at least in terms of political, social, and cultural leanings. Second, China's lockdowns and rising material costs, which have greatly affected production and other facets, are transient. It can be noted that Beijing has continued to implement heavy-handed measures meant to curb the spread of the coronavirus. The end result is extreme difficulty securing much-needed components from Chinese suppliers. Lockdowns haven't exactly helped the production of or demand for Tesla EVs in China either, where the company does about 1/4 of its business. Simultaneously, most material costs have soared over the past year. The lithium used to make EV batteries costs roughly twice what it did just a year ago, and while well below its peak hit in March of last year, the aluminum used to make Tesla's vehicles' chassis is still relatively expensive too. That's why Tesla's cost of revenues grew measurably more than sales did in the second and third quarters. On both fronts, though, the headwind is easing. China is easing a significant portion of its lockdown measures, and most material prices, including aluminum and lithium, are falling, even if only shallowly. S&P Global's Market Intelligence says lithium carbonate pieces peaked in 2022 and should hold steady at slightly lower prices through 2026, with supply finally catching up to demand. Finally, Tesla is still the name to beat in a fast-growing EV market. At this point, there's no denying more traditional car makers like Ford and General Motors are making inroads within the electric vehicle market. A handful of newcomers like NIO and Rivian are making some noise as well. Tesla's share of the US and the global EV market have both fallen over the past year. Although Tesla's shares of the electric vehicle market is shrinking, Tesla's top line is still growing because the EV market itself is still growing. The International Energy Agency estimates EVs will account for a record-breaking 13% of the world's light vehicle sales in 2022, up from 2021's 9%. In a similar vein, Precedence Research is forecasting annualized EV market growth of 23% through 2030, jibbing with outlooks from Beyond Market Insights and Deloitte. In fact, according to analysts from Recurrent Auto, the Tesla Model Y could be the best-selling vehicle of 2023. Recurrent Auto, an automotive market analysis and retail software company, has released a complete set of predictions for the automotive industry in 2023. Most notably, Recurrent CEO Scott Chase predicts that the Tesla Model Y will be the best-selling vehicle of next year. Recurrent isn't completely unfounded in believing that Tesla Model Y could achieve amazing results in the coming year. The Model Y has achieved amazing sales stats around the world already in 2022, most notably becoming the second most popular EV sold in China in November. If the vehicle can maintain this success going into the new year, it could be a defining moment for the American automaker. Still, nothing is set in stone for now, as it is too early to tell what will happen to Tesla this year. Several days ago, Tesla published its fourth quarter vehicle production and delivery report for 2022. In the press release, Tesla reported Q4 2022 total deliveries of 405,278, total production of 439,701, total annual deliveries of 1.31 million, and total annual production of 1.37 million. Deliveries are the closest approximation of sales disclosed by Tesla. These numbers represent a new record for the Elon Musk-led automaker and a growth of 40% in deliveries year over year. Unfortunately, the fourth quarter numbers fell short of analyst expectations. According to a consensus of analysts' estimates compiled by FactSet as of December 31, 2022, Wall Street was expecting Tesla to report deliveries of around 427,000 for the final quarter of the year. Estimates updated in December and included in the FactSet consensus ranged from 409,000 to 433,000. It can be noted that Tesla started production at two new factories this year, one in Austin, Texas and another in Brandenburg, Germany, and ramped up production in Fremont, California and in Shanghai, but it does not disclose production and delivery numbers by region. In the fourth quarter of 2022, Tesla said deliveries of its entry-level Model 3 sedan and Model Y crossover amounted to 388,131, while deliveries of its higher-end Model S sedan and Model X SUV amounted to 17,147. Where Tesla will go from there remains to be seen. People can only hope that 2023 will prove to be a great year for Tesla and its stock. In light of that, many are looking forward to Tesla's 2023 Investor Day, which is happening in March. The latest press release from Tesla announced their plans to host Tesla's 2023 Investor Day on March 1, 2023. The event will be live-streamed from the Tesla Gigafactory, Texas, with the option for some of the company's institutional and retail investors to attend in person. Our investors will be able to see our most advanced production line as well as discuss long-term expansion plans, Generation 3 platform, capital allocation, and other subjects with our leadership team. Read the press release. Hopefully, the Tesla executives will report and outline their plans for the company as well as share some good news with everyone. A discussion about a stock buyback is expected to take place at the said event. For now, investors are desperately hoping that 2023 will prove to be a better year if the rising stock price in the market is any indication. Make sure to subscribe to this channel for more huge news about Tesla stock.